Good evening, everyone. My name is Faisal. I am the head equities analyst over at thealphatrades.com. It is August 26, 2020. A pretty cloudy day. I think we're expecting a hurricane here in Houston, so it ain't all too sunshine down here, but hopefully it's not going to be too bad and my electricity doesn't go out in the middle of me recording this. But anyways, let's go ahead and get to it. Today was a pretty Oh my God. So for those who already know my positioning, I've made my positioning very clear and open. I've been short tech probably for a little over a week. I want to say I got in 2 weeks ago on a Friday, and most things were looking fairly fine up until yesterday. I think yesterday was the first sign that I got where it felt like a lot of the tech leaders and the high growth leaders were starting to show signs of bottoming. And while they're I was really expecting them to break down sometime this week. They actually didn't, and they showed a lot of firming up yesterday. I'm talking about stocks like Okta, Coop. There was another one that was very solid as well. I think Fastly. Fastly was one that surprised me a little bit. Oh dang! It actually went down today. But yesterday, yeah, it had a very nice day. It went up, I think. Oh shoot! It went up like more than 10 points from the high to low. Um, and so it was a really significant move for a new high growth leader that I follow, and that told me a lot about the sentiment regarding high growth stocks and risk appetite. And overall, I came away yesterday feeling like, okay, this market wants to go higher. Um, then we got the positive report from Salesforce where they just blew away the EPS estimates for this quarter. I mean, the analysts completely just got it wrong. And if you guys have been reading some of my notes, Salesforce, Workday, these are kind of like the least extended stocks within the software sector. So I'm really not surprised to see this stock go up, but man, I mean, to go up, how much did Salesforce go up today? Oh, there's room. Salesforce went up 26%. Like, I'll be honest, when it was up, I think 7 to 8% yesterday, I was like, okay, that makes sense. But to be up 26% is unbelievable. I mean, this was already a multi-billion-dollar enterprise company, and it just grew 25% within a day, and that was off of the fact that they beat current estimates and they raised their full year top and bottom line. When last quarter, I believe they had not given any type of guidance. I think they had withheld it, but to come back this year and reaffirm strong top and bottom line, I think it not only says a lot about the software sector, but about the hope of other small businesses and the overall tech adoption that still needs to happen on the other side, because we're seeing a lot of bankruptcies. We're seeing a lot of economic stress on small businesses and mid-sized businesses still. And the fact that Salesforce came out and said, you know what, we're going to raise full year guidance. People are still trying to work. Companies are still going to become more efficient. And ultimately, this technology should help those companies become more efficient and increase overall operating efficiency. So down the line, I think it's beneficial for those that survive. But once again, just looking at what Salesforce said, it was really positive, and for them to give guidance when beforehand they had withdrawn it. So I think that's why the stock had jumped. I think there was a lot of pent up. I don't know if it was a highly shorted stock. Let me see if I can see that real quick. It's a fairly okay. So it's shorted. That's definitely going to come down after today. So the shorts were definitely in this stock before. I think that's a much higher short interest than the other software companies. Coop is still high. What is this? Roku is probably still high. No, Roku is actually not high at all. But it kind of varies. I guess Coop has seen a lot more short interest over the past couple of weeks. But for the most part, the short interest in these tech stocks has been coming down from where they were about a month ago. As people cover and the market continues to go up, it proves people like myself wrong. And so far, I'm still feeling like tech could sell off, but at this point, I don't know if it's going to end up pulling back. I think it'll definitely take a pause, probably tomorrow, and where they decide to close tech will tell me a lot tomorrow. at this point, I'm really just hoping that if I do get the sure enough signs that tech is looking like it wants to bounce back and continue to move up from here, I'll probably sell within the beginning of the day when it does take a pause, and then if it starts to hold my points and looks like it wants to bounce back up, I'll probably end up selling or covering even more short in Coop and Roku. So yeah, today was an overall just messy day for me. I was shorting tech, and it was not a pretty day. Especially I was shorting Roku. Roku was one stock that went up in response to high growth having a lot of momentum because Intuit reported well and Salesforce reported well, but mainly because Salesforce, I think, was the main driver. You also had Autodesk, which is another um, key key like infrastructure software leader. That's a very big company, and usually that is a barometer for high growth as well. But they missed on their numbers, but it looks like they closed out to today fine. No, they were down a little bit. Okay, but they, I mean, they came back 10 points from low, so it's pretty good. So overall, tech still is the leader of the market. It's still continuing to show people that even though it's extended and overvalued, and I guess it's kind of hated by me. I don't know if many people hate tech. I think there's a lot of people who want to hover around tech because not only does it provide the assurity of the earnings and guidance, but it seems like that's kind of the only thing that's working. And I think there's a little bit of FOMO, people chasing some of those gains, and um, it's less about the reasons that we bought them two months ago. So I was fairly long the entire correction. I want to say I was about 90% long the entire recovery rally. Sorry, and for the most part, I've invested in tech. I've played semis. I played um, software. I played a bunch of tech throughout the entire recovery, and it just seems like now the reasons don't really apply back then. Or I'm sorry, the reasons don't really apply now that they did back then. So, for instance, when I was buying companies back in April, May, I was pretty much buying them and telling people to buy them because 2020 and 2021 estimates looked very good. And so far, as this earnings quarter has come and gone, we've seen that a lot of companies, including Coop, um, is going to regress this year, or going to regress next year. Estimates are coming down overall. Let's go ahead and check out Okta real quick. Okta is one that's reporting later on this week, so keep an eye out for that. Okta is going to, oh, they're still growing fine, but the rate of acceleration, I guess, see, that's weird. Why is it negative 31 cents? The rate has definitely decelerated this year, and it's going to accelerate slightly from this year to next year, but overall, we'll see what happens. I mean, it's still a $28 billion company that doesn't make any money. So if in a crowded space, they end up losing even a little bit of market share or unique technology momentum, that could really detriment the stock. But I'm not going to get into that. So far, I'm still positive on Okta overall. Roku is one that is going to see estimates decline, or I'm sorry, earnings decline this year. As you can see, in 2019 they made negative 52 cents. Now they're going to lose $1.44. And that gets a little bit better in 2021, but once again, it's still extremely high relative to its history, or I'm sorry, it's extremely low relative to its history. So I'm still feeling like, there are a couple of software companies that are seeing their drawdowns a little bit, but for the most part, I think just the risk reward remains very thin. And if we are really a believer that this economy is going to come back foolproof and strong, then those other sectors have to rally at some point. And I know I've been saying it for a while, and I've really reduced my value exposure a lot, but that's just what makes sense. You can't really have this tech safety premium if you're expecting everything to be all fine and dandy, because once again, these estimates are based on the fact that these businesses can recover, that they still have the cash to upgrade technology and consistently upgrade technology. And so I think that remains in question. I don't know how much I trust the estimates for this year regarding how much tech companies can grow, because it seems like they all say that they can grow 25, 35, 40% this year to next year. And that could be right, but I don't know how sustainable that is, nor do I know how um, how how much the stocks are really pricing in that future growth. I really can't tell if buying Okta today is pretty much buying it for its 2022 estimates or 2023 estimates. If it meets those expectations, it's still very, very unclear to me. And I think at this point, it's probably better to not try and guess it, because it's just valuation. Like I said, it has not mattered for a little bit. I've been saying that for the longest time, and it continues to not matter. The only differences between now and 2 months ago is that the estimates are not as strong as they were beforehand. When you would take a look at the software sector in April and May, you would see that they were literally the only sector, or I'm sorry, the only industry that was actually showing upticks in estimates for that current quarter, this quarter, and the whole year. Now it's a little bit more broadened out. You're seeing companies give guidance for next year, whether it's in the industrial sector or the healthcare sector. More companies are starting to issue guidance and get a better sense of where things are going. And for that reason, it's hard for me to buy tech at these levels when the estimates are coming down, bottom line, and other sectors' estimates are coming up. So once again, I'm still short on tech, to be honest. I know I said that I wanted to liquidate some of my tech shorts by the close, but I'll be honest with you, I actually did not touch any of my shorts. I did not cover them at all. I did not even trim them one bit. Basically, my plan is, because today just felt like this euphoric type of day, and I truly believe there's going to be some type of pause. Whether or not it's going to be a serious pause tomorrow remains to be determined. But I think it's best to leave the trimming to tomorrow morning. If like I said, my tech leaders start to show that they can hold their key support levels that they broke through today. So we'll see. I think like my hope was a major pullback in tech. At this point, I feel like it probably won't happen. But once again, that's not where I'm at now. And if for someone who's shorting tech, my goal is now to figure out when are the best prices to reduce my overall exposure and risk. Because look, the leadership in tech is still very strong. You had Microsoft make an all-time high. You had another stock make an all-time high. I forgot what it was. Let me see. NVIDIA. No, there was another big leader that made an all-time. Was it? No, it wasn't Shopify. There was another big leader that also made an all-time high, but Microsoft is a very key one, because I've touched about that, and its disparity between itself and Apple. And I was saying that was a really negative factor in the market, that we were starting to see more narrowness. But with Microsoft making an all-time high, even though it's not paired along with Apple making an all-time high, I think it's still very important, and it's a really positive sign for the market. It's one that scares the hell out of me for someone shorting tech. So I continue to be prepared for another upside swing, and I think just from a technical perspective, the odds look more and more in favor of a really nice upside swing in growth stocks. I'm talking AYX looks interesting, Datadog looks interesting, and there was another. I think Xilinx is a good kind of mix between value and growth. But once again, those estimates are coming down this year, but they're going to be fairly good next year. And I think I guess we'll see with 5G how much effect that has on companies like Xilinx. But I think those are three stocks. Probably Marvell is a better pick technically. I think those four stocks are places that I'm looking to go long in if I start reducing my tech exposure. And for the most part, that could definitely happen within the first, 2 hours of the market open tomorrow. If this type of momentum continues again early on, I think that'll be very clear that I have to reduce initially. But like I said, I'm expecting a pause for the market to probably open down or come down. We'll see where it holds, and depending on where it holds, that'll tell you a lot. But the technician side tells me that, but the gut side I'll be honest, the gut side has not been too accurate lately. The gut side feels like things are just far too away from the short-term deviations that some type of pullback has to happen. And it's also mixed in with this over euphoric feeling that I get When looking at all of these different stocks, like CRM going up 26% is not like, yeah, the earnings were great, but that's not normal. That's not this is not a small company that blew away all doubt. You know, CRM is a software company. It was already trading close to its all-time highs. We knew that this was going to be one of the winners in this environment. And even though analysts were wrong, I'm still so shocked that it was able to add such an enormous amount of value in just one day. So once again, I think these are all examples of hyper euphoria, but I really thought that when I saw this move with Apple, that was the key pendulum. That was going to be the mark that everything would go down. And sadly, I've been wrong since then. I think tech has gone up. I want to say maybe like 3.5%. So I don't know how much I'm willing to bank on it. That's why I'm still planning on reducing tech exposure if I do see those short-term bottoming signs, but I'm not ready to give up altogether just yet. I continue to believe that the risk reward for shorting here, especially tech, is a lot higher than buying it and holding it for a month. Like for me, if you tell me I gotta buy Shopify and these are good companies too. I love Shopify or let's just say Apple or Tesla or anything. If you're telling me I gotta buy them and hold them for another month, like I'm feeling very nervous. I think within a month you're going to see some type of pullback. Like this extension is huge. It's unbelievable. Even when you look at the S&P, the extension from the normal deviations is just extremely high. And so mix that in with this type of euphoric feeling and this euphoric chase of the winners and momentum, ignoring all fundamental factors, even the estimates. It's just it feels like a trade that I think will ultimately pay out sooner rather than later. And like I said, I continue to believe that the risk reward for shorting is actually a lot higher than buying even for a month. Maybe if you're buying for 5 to 10 years, or actually no, it's still a little bit iffy. If you're buying for maybe 2 years, I think you're fine. But my God, I think, like I said, it's so far stretched above the short-term deviations that the likelihood of a pause or I mean, I don't even know, like it sucked all doubt that this market can pull back. I don't even know if it can pull back. It may just chop sideways or whatever. But ultimately, I'll probably wait for that chopping and that consolidation to somewhat close, and then I'll try and invest heavily into high growth. But for the most part, I'm still very iffy on it. But like I said, waiting for those signs tomorrow. And if I do end up covering a little bit of my short, I will probably pair it with a long and Datadog AYX Marvell or Xilinx. Let's see what else happened today. What else? There were a couple of other key stocks. So Nike closed fine. Nike actually closed flat, actually. Where Amazon closed. Amazon made that was the big one. Amazon made an all-time high today. So I mean, yeah, after a really nice consolidated pattern as shown by this very nice green dotted line and the solid green line, Amazon consolidated right after actually its earnings were right here, so it had been consolidating even through its earnings, and the fact that it was able to break above its earnings price this day, that was already a significant factor. And then you have the breakout today on really nice volume. It's just, I mean, what to expect? I mean, this market just looks strong. And I feel the more signs that I look at, the more I feel like, man, it's really like, I really don't like shorting tech. I really don't feel good being in this short. But like I said, I think price changes sentiment. And ultimately, this is also a very volatile market. I think the volatility that we're seeing to the upside, while it's very big, I think we're all seeing that the volatility is tremendous. I've been trading long enough to know that the volatility to the downside is always higher than the volatility to the upside. And given that this is a very volatile market that we see large upside swings, I think we could definitely see extremely large downside swings that will catch people off guard. And that's ultimately what I'm hoping for when I'm shorting stocks like Penn, Roku, and XLK. So far, it hasn't panned out, But once again, you you have to have your thesis. You have to be true to your thesis, but also be willing to know when you're wrong. And so far, I'm kind of in the middle ground of that. I don't want to give up on my thesis because, like I said, the risk reward is higher than owning high growth or other assets, a lot of other assets for a month. You can still find value here or there, but value hasn't worked out either. Um, but in the end, the way I'm going to play this is just capital allocation. I'm going to have to reduce my overall short exposure. If I'm about 45% short right now, and that may come down to 35%, and hopefully when I do get that big pullback, it'll be enough to cover all the losses that I've already sold out on or trimmed out on. So I'm still playing it that way, but ultimately I'm going to go with a more balanced approach. Like I said, if I do end up covering, it will be paired with a high growth long, and I may end up starting to diversify and get into other longs. Like I said, Yum Brands looks interesting from a value perspective. Edwards Life Sciences looks good from a value perspective. A lot of these stocks, there are good stocks to play in the market, but once again, it just feels like tech and high growth is sucking all of the spotlight from every other sector, and maybe rightfully so. But I bet you that this party will not last for long. I have a feeling. I can't really explain it. It's just there are these signs like with Apple, with Salesforce. It may not happen as soon as I feel like it will, but I definitely think that there will be a week coming very soon where obviously the market will pull back, and we're going to get a very volatile, probably 10 to 15% in 1 week. And you will have the dippers come in maybe at the end of the week or midweek or whatever. And the market will punish people. I think the market has trained people to be ready to buy the dip, including people like myself. I think I'm ready to buy the dip. It just has to be on the right circumstances. But I think the majority of people who are ready to buy the dip are only doing it on a technical or momentum basis. I don't think they're necessarily understanding that these stocks are so overextended that they can't just come down 15% and be fine. No, they actually have to come down 30 to 35, 40% to be fine. And then I think you can start to see some normalcy come back in their uptrend. But for the most part, that's a theory of mine that has not played out well. But like I said, tomorrow will be the day to see. I'll be very surprised if all these stocks that made all-time highs today can continue to make all-time highs tomorrow. It just feels like a day. It just feels like a time when at least we're gonna get a pause. That's all I'm gonna say, because I've been I've been fairly wrong on the tech pullback call, at least for a week. So anyways, this was my quick wrap up. I just wanted to give you all a quick video, especially about how I was positioned and how I'm looking forward on the market. You guys already know a couple of longs. For the most part, I'm assuming most of y'all are long, and good for you. You guys have definitely been on the right side of the trade. But keep an eye out for those four growth stocks that I mentioned, and then other value stocks like Caterpillar, URI. What else was there? Yum Brands. I think Walmart may be showing some bottoming signals. We'll see. But those are four value stocks that I'm hopefully looking to get into. Even if tech starts to pull back, I may nibble at them. We'll see. But like I said, for the most part, I still remain tech heavy, and nothing has changed from yesterday to today as far as my allocation. But that will probably change tomorrow. So I hope to hear from you guys in the Discord. If you have any questions, just go ahead and shoot me a DM. But anyways, I look forward to seeing how the market opens up and trades throughout the day tomorrow. And I look forward to giving you guys hopefully some good news then. So everyone take care, peace, and have a great rest of your night. Thank you.